Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. Happy Sunday to you and your family. Obviously, hoping your weekend is shaping up nicely. We're going to take a look here at Bitcoin, kind of see what's up with the weekend behavior and obviously what might be next. Okay. Now, we're going to look at just kind of some standard stuff, but also more importantly, the traditional markets and kind of understand, what that could do for us. Because if the traditional markets are coming down like they did on Friday, then we can expect a red day tomorrow. Something tells me we're going to see somewhat of a recovery tomorrow, but again, it's too early to tell. So take a look at that and much more. If you're new to the channel, not a financial advisor, I love teaching people to trade. Truly hope you can learn something here today. If you do end up learning something, comment below, let me know. And obviously, if you want to become a better trader, you want to learn a lot more, CryptoCache.tech is a site, link in the description below. Be happy to help you out there, and obviously, join our over 200 active members at this point. And what I do is I have a trading academy, a community, and signal group. So check that out, of course. And again, if you have any questions, comment below or send me, a direct message with my contact information below. I'll never direct message you first or solicit you. So please understand that. The comment section is full of useless idiots. Not the nice ones that comment. Thank you so much for that, by the way, but I'm talking about the scammers, the spineless scammers that we see trolling the channel and every other channel, of course. That being said, taking a look here at Bitcoin. On the daily, we can see a doji candle forming here so far. So this does close in a doji close to, just say, 20,000 today. That would be positive in the sense that we could see a potential shift in momentum and a turnaround. Now again, it's way too early to tell, but generally speaking, that is the concept of how doji candles work. They usually kind of signal reversals, especially if you get two of them in a row, which we've seen previously. So again, handful of little things you can kind of add to your toolkit, but that is something we want to kind of pay attention to. We also want to kind of reiterate the fact that 19,800, basically 20,000, it's a key level of support that was a previous resistance level back in, I think, late 2020. So it seems kind of weird that that's still relevant, but that is absolutely a thing still. And we can see a lot of support right here, of course, at this level. If we take a look at the volume too, like for a weekend, yesterday was a pretty decent amount of volume. Okay. Now, a lot of that was just accumulation, Bitcoin increasing its dominance, and effectively, a lot of money coming from altcoins going into Bitcoin. But regardless of that fact, it's a weekend. Typically, there's lower volume on the weekend, so we can't judge this current behavior, the last 24 to 48 hours, strictly on traditional markets or anything else. It's basically just the weekend behavior, and it's always a little funny in most cases. Majority of the weekends are uneventful, for lack of better terms, and or they're typically green. In fact, last weekend we see these two here. Saturday, Sunday was a nice green weekend and got rejected at 21,700. Now we're seeing two red days, so hypothetically tomorrow could be a green day, right? Again, different strokes for different folks, but it's very common for the price action to recover after such a dramatic decrease, especially when the traditional markets, for example, are down 4% in one day. Like 4% for NASDAQ is huge. Like that is a big deal. Okay, so just keep in mind that there is that. There's also some support in this area as well. I'll maybe do a TA on the traditional markets. Let me know if you'd be interested in that. I don't think anyone really truly cares, but it does kind of tie in, and it's something I used to do, so it wouldn't be a problem at all. But for right now, the feeling here is that we're going to see a slight bounce tomorrow. That's my feeling. Again, feelings don't belong in trading, but you have an eye for it after a while, and you start to kind of see things happen. And the way this happened recently, Friday should have never happened, honestly, just based on the stupid, the Fed meeting there, or Jackson Hole. But suffice to say, it happened nonetheless, and that's where we're at here. So it's that knee-jerk reaction, and we could very well see a slight recovery tomorrow. I don't think we're going to see 22, 23, 24,000 in the immediate future, but once we break this descending trend, this initial one, then we'll be looking to break the larger, more prevalent descending trend as well. All right, so again, just a small little thing here and there. Also bottoming out here on the RSI, which is good, allowing it to potentially recover from here. So hypothetically, we shouldn't see anything lower. And again, I say hypothetically because there are cases in point in the past where the price action, of course, drops below 30 on the RSI. It's not to say it's a guarantee it's going to stay there, but more often than not, you will see 30 working as a pretty strong support level. So until it breaks, we have to assume it's going to continue to hold. If it doesn't hold, here's something we want to recognize, is the fact that we will see right around 19,000 potentially as the next level tested, because that was the most recent low, of course, at least the most relevant recent low, where the price, if it were to come down, we could see a bounce off 19,000. That's a possibility. Again, hypothetically, we shouldn't see that based on the current support at this area, but it's also just something to recognize, okay? So that's kind of where we're at there on the daily. All in all, not fantastic, but much better than yesterday. And I would say ultimately not terrible at this point. We've even seen kind of somewhat of a double bottom. I'll just jump right over here to the hourly. If you kind of stretch this out, you can kind of see the price wicking down to exactly 19,800 and then getting rejected. See, so what that basically just tells us is that the bears tried twice to hit that level and to break it, and the bulls are unwilling to allow that to happen. Especially with these large candle wicks down, that tells us there's more buying pressure than selling pressure at this level. It's a good sign. You look at the level 2 data, I'm sure it'll probably reflect something similar, whereas we have a lot of long positions with their stop loss just below that level and they're willing to protect it. So again, a lot of little things that kind of add up here, but if we take a look at the 4 hour, let's go back here and we'll see that we are underneath both moving averages. Of course, that's pretty standard. We're trying to peak back up above 30 on the RSI, which is beneficial, and we're starting to pick up a little momentum here as well on the MACD. No guarantees, obviously. We know this with the MACD. It can definitely give you some false positives, but for the most part, that's implying that the momentum is shifting from bearish to bullish. Now, again, this bullish momentum may not be very strong. We could very well see a dead cat bounce up to this level right around 20,000. The price action, or sorry, 20,100 or maybe even 20,500. Either way you look at it, it could come up and get rejected, all right? But the bottom line is that the momentum is starting to increase, and whether or not we start to make higher lows and lower highs, whatever the case is, we still need to acknowledge the fact that the price action should recover at least in the immediate future, all right? Again, just based on the overextension that we were seeing. And speaking of overextension, let's take a look at this here, because again, MACD and RSI look pretty decent there. We're breaking back up over 30 on the RSI. And if we take a look at TD sequential, we hit a 9 on TD sequential here. So again, we even got a little further down, of course, at that point. So we got a nice little reset here. Hypothetically, we have another day or two worth of trading to the upside. Again, I say hypothetically because when you hit a 9, it doesn't always just bounce right back up, okay? But what it commonly will do is at least consolidate, which this did. And unfortunately, Friday was some bad news and it came on down. So hypothetically, we avoid any potential bad news this week. We should be in good shape to see the price action increase. Again, you never truly know. The world is a funny place. But, again, you got to recognize that Bitcoin, altcoins, whatever the case, cryptocurrency is a secondary market. They're going to take money and or profits out of this market first before they take it out of, just say, the primary, the traditional U.S. stock exchange. So again, there's a priority list that they have, and the whales are taking money and profits from here first, which is why we see such a dramatic difference in most cases. When the regular markets go down by 4%, we saw a correction of somewhere in the range of 9 to 10%, right? Again, just something to recognize. But overall, these things together tell me that the 4 hour time frame looks pretty darn good, and I would say we're more positive than negative there, and the likelihood of a potential increase from here is greater than a continuation of the downside, at least in the immediate future, right? Again, we're still bearish in the macro, right? We have to recognize that price could and likely will continue to go lower, but in the immediate future, I think it's pretty important to recognize we could see a retest of what, 20,700, right in that range, perhaps even greater, hopefully 21,000, 21,100, and to kind of have an opportunity to get filled in those positions that we're in with Bitcoin longs. All right. So again, taking a look at the 1 hour, last thing we're going to summarize here with is just kind of traditional stuff. In other words, taking a look at overextensions, we can see we hit a 9 here, got overextended, came all the way down even further, got a reset. And now we're back over here. We even came as low as a 7 recently. So it tells you that the bears are starting to lose control. The more 9s you see in a row to either direction, the more likely it is the price is going to turn itself around. It's rare for you to see like 2 or 3 9s in a row and it keeps going. Again, that really just implies that we've seen 36 hours of continuation of the downside. Enough is enough, and the bulls are ready to take their plunder or plunder their booty. I don't know what the heck you want to say. They're just wanting to get back in the game, right? And we have a lot of buying pressure at that level. So that is essentially what we're looking at there. Last thing to summarize here, of course, is the Ichimoku cloud. And this is basically telling us, again, not to take a long position because we got this ominous looking upper and lower lead here from the cloud. But we can say that the conversion line is trying to break through the baseline, shifting that momentum essentially just like we saw in the MACD on the 4 hour. And we also have, of course, this conversion line, the lagging span rather, intersecting with the price action. That really tells us that if you have a short position, you may want to consider closing it and you don't get super greedy, okay? So again, take profits while you still can. If you have a short right now, it shouldn't go lower according to the technical analysis, right? Again, all fundamentals aside, we're looking pretty good here for the price action to continue upwards, at least to at the very least travel within the cloud here and possibly get rejected up here. All right, I think 20,700 seems like a likely probability in the next 24 hours. Again, depending on how the traditional market opens, right? Regular stocks and the U.S. market is down another 3 or 4%. Yeah, we're going to see a correction from Bitcoin. I just don't see that kind of thing happening. Anytime in the past we've seen a traditional market affected by that large of a percentage, it recovers quite quickly. And again, I think we're in pretty good shape. So I wouldn't overthink what we have going on right now at this point. I think we're in pretty good shape. All things considered, I would recommend, of course, to the select few that like to dollar cost average, definitely do so. I've been adding to my position every chance I get. Again, it's only a little bit each day. I'm not going crazy. I would not recommend putting your entire bag in right now. Obviously, wait for the 15, 14,000 range if that were to happen to do so. But if that never happens, wouldn't it be nice to have a nice, decent average position around 20,000? I don't know. To me, that seems appropriate just based on the overall sense of things. I feel like we're really, really close to the bottom for Bitcoin. And notoriously, we see September as a red month, so I'm not saying that we're going to just be instantly green again, but once we break this bearish type of trend, we'll be range bound and essentially trying to ascend from there. And I do feel as if traditionally how things work, November, December should be green months. Yeah, we should absolutely see some decent recovery in those months. That's a very standard thing. So all in all, that's kind of where we're at here for Bitcoin. Enough rambling, sorry. Apologize for that. I hope you learned something here today. But again, more information we have, the better off we can make an informed decision, right? And you help us on the right direction. So again, be cautious, be careful with your entry. And to those of my members in my community, just stay patient. The system works. You just got to let it take its time. Let it do its thing. And at this point right now, this is fairly well expected, but it makes sense that the price action shouldn't go lower in the immediate future. All right. So however you want to interpret that is up to you, but I can assure you, if you use smaller position sizing while using leverage and you're playing your cards right, you can do very well in this industry. So try not to just get in a mindset of like, I want to be a day trader and a swing trader. Pick one or the other, right? But for the most part, swing trading, I personally feel short-term swing trading is much more beneficial for your heart and soul because it takes a lot less out of you than it does to day trade every single day. Again, having been there, I can speak to that. Everyone's experience is different, but generally speaking, you want to be, you want to work within your risk tolerance. And if your risk tolerance is high stress, it probably isn't the most effective way to go. Just thinking out loud. All right, thanks again for joining me here. I hope you have a fantastic rest of your day. We'll see you again tomorrow. And thanks again. We'll see ya.